All right, good morning, peoples. Let's get on to Coney and Coin. All right, as expected, and I knew it was going to happen, we ran by the numbers, right? That's what happens when these guys do not write them further out. For the life of me, and they're doing it again next week. I just don't fully understand. I mean, in essence, I get that they're not going to get much money, okay? And that's a problem. But honestly, it still doesn't justify getting overrun so often. It's like they're still operating like a script. Now, I'll give them some credit. They did watch this intraday, and they did, when we dipped down a little bit in the day, they did buy these back. I mean, was the execution perfect? No. But they showed active management that they tried not to establish a bigger loss. And they were generally successful, but just by writing them where they wrote them. So, what did they do this week? Well, they wrote them. I'll get into that. All right, let's talk about what happened because there's a lot. No synthetics, no shares forcing them to do anything, right? Nobody bought shares. Okay, so this is the massive amount of coin transactions. And it doesn't do me any good to show you every one of them, but I'll just talk to them for a second and then I'll show you them on the sheet because so every one of these buy to close means they bought something back. Well, what's relevant to you guys is what did they sell it for, right? Well, obviously, when you bought it back for 20 cents, they sold it for multiple dollars. But that was the higher end one, right? The 2075, because we closed around 205. So let's go into what happened. Now, I've got so many 816s because we put so many trades on. I just didn't need this last one. All right. So on 815, we were at 1570 and 197. And our strike was 200, 202.5s, and 207.5s, right? You see them up here? Here's the 200s. Here's a 275. Here's a 225, several, right? So there were three groupings of 202s, three groupings of 207, and two groupings of 200s. The 200s were 45 to 48% of the total. They were like 15,800, and the others was like 17,000, the collective 202s. So by closing at 205, we exceeded most everything. But at least to their credit, they didn't just wait till the end of the day like I've seen them do sometimes. They went in, they watched it, it was up, it came down, it hit a low of around 201, 201 and change, and they went in and got those 202 and a halves off, got the 200s off. But I mean, we still lost most of the money that we had received. I'll go through each one, okay, because you'll be able to see on this sheet both the open and the close. So let's take them one by one. So there were no synthetics traded or anything. This is it. So they took all these back and then put all these on for the following week. So nothing wrong there. So you can see here by having a close strike and running there that they had to pay $3.10 to buy a 200. So did they time that perfect? They probably bought it at around 202 something. It did go as low as 201 or 201 and a few pennies. But hey, I understand. If it's very early in the day, these market makers play tough. I've done enough options that I get it. So then on their up, but this is interesting. Look at the dynamic. And I get it. And this isn't a bad strategy like, oh, I think it's low enough, it may not go lower. I'm buying this one back. At least I didn't lose everything they paid us, right? Because they paid us 2944 and I paid 248, right? So I still made 464,000. And then this one they got right. I don't know which order they did it in, right? At this point it doesn't matter. But both these were sold at $3.68 on different groupings. And so one they paid 3.1 and the other 2.1. I'm not faulting them. I get that, during the day it's trading and you do what you do. Maybe they did this one early and thought, oh, it may get better, and then it got worse. Or they did this one and said, we're only going to do half. So I'm okay with that. Much better than all 15.8 being bought at 3.1, because they made $1.2 million on this one out of having collected 2.8. So anytime you don't buy back everything they gave you and took a big loss, I'm happier. Okay. They got a portion of the money, right? This one was probably, what's 3 out of 3.68? It's probably like they got 20% of the money. This one, they got $1.50 out of 368, so they got about 40% of them got to keep 40% of the money they collected. And on the 207s, I mean, 20 cents is a lot when it never even went to 207. But I do understand how these you have to settle in cash, and you never have to worry about being assigned. You'd think they'd be able to get one for a penny or 2 cents, and unless I did that job and watched it day in and day out, so I'm only speculating what's going on. I do know that they have to make a phone call and kind of negotiate. It's not where there's a lot of volume, but it's like customized, if you follow my drift on that, as opposed to just clicking your mouse and saying the bid and ask is 2 cents by 8 cents. I want to buy it back at 6. So as that's how it's been explained to me, right? I'm not working on Bloomberg terminals, and I'm not operating in their flex environment with European option, although I do understand the purpose of them. Okay, so just trying to be, forthright with you. So they bought these back for 20, and they bought them the other groupings, right? So they bought 7,200 and only 750. So on those, that's a big win. You still got 90 something percent, right? You sell something for $3.49 and you buy it back for 20 cents. That's a win. Here they got 375 and only paid 20 cents. So cool. The only other one we haven't talked about is the 202, because clearly there was better opportunity. Like I said, I should show you a day chart on that, just so you guys see. I think sometimes it's worthwhile to sort of recreate the day, okay, so that you see what they were seeing if they're really active. So here we go, peoples. This is a 1 day. Now, there's all kinds of charting where you can go 1 minute, 15 minutes. This is a very basic chart. But it is the one trading day from opening, right? Depends on if you're East or West Coast, right? So 9:30 if you're East Coast, boom, opens at 198, and within 30 minutes, it's up at 205. Okay. So they were like, what happened, right? Because I tell you what those market makers do in here, even though it's a 200, they probably got $1.20 or something on that 200, even though it's right here and it's starting to roar. And they're like, well, maybe it's going to come back in the day. That's a hard one when it happens quickly. So then you see this thing come back, and actually this would have been, these are typically hours here. Let's see if, yeah, they're hours. So 9:30 in the morning Eastern, then 10. So in this 11:30 time frame, it got down to 201. Well, that's far enough in the day that a 200 probably could be bought back. It's clearly $1 in the money. You would think you could get it for $1.50, $1.60, right? If you just see that and execute. Now, they had some other opportunities at 202, so it's hard to know. But I can tell you this, they didn't just do it right here and do it right here. They did catch some of this. So kudos in they weren't out playing golf and they weren't out not paying attention, guys. So, I beat them up when it looks like that, and this is okay, not an A, but I'll give them a B or a B minus. They did actively manage this. All right. So because the 202s, this one, they paid 260 for the close price and 220. So it shows you they could clearly get some 220s, but they also paid 260. And again, I can't tell you exactly what the price is, but my guess is in that one window at 201, they could have gotten that 202.50 for at least a buck and a half, I would think. It still had $1 worth of just premium, but 50 more cents or so. So anyway, I'm sorry I'm going into the weeds on that, but some of you guys really understand this and I'm trying to explain it. So overall, I had to list all my new ones on my sheet. So on these, everything was under. There wasn't a single buyback that exceeded what they got it for. So we probably got, we got to keep maybe 40% of our money somewhere in there. I didn't redo the math on it. These really helped. The 7,000 here, and that's only 750. So call that 8,000. And then the ones where it was 385 and we got it on, that's 11,000. This one is almost half, only 950. This one's half, 800. So I'd say they got 35, 40% maybe of everything. Only these were up where they didn't get quite as much. All right, guys. So what did they do in writing them? Well, they did ladder a little bit. They chose two 1250s and two 15s. But guys, I don't like how far that out that is. So the two 15s are 472 and 350. Now that doesn't mean that this doesn't just set flat and hey, they got them all. But I'd rather get a little less money and go a little further out. So that's just me. Because look at what happened here. Think if that 200 had been a 205, they would have been buying that back at 50 cents. Especially when it went down to 201 or something, 202. So that's all. Sometimes the little things matter. All right. So what does that mean for us? Well, we already are where we want to be with our synthetic because we're at a 210. So the synthetic is going to be good if it keeps going up. But if we run up to 215, okay, I'd love to see 215 even, but not in the sense that we're going to lose a bunch on our 212s, right? So they're skewed a little bit. Let's go look at our weeklies. They're skewed a little bit in favor of the 215. So we don't quite, if it goes to 215, let's see, what did we write? Did we write more than 250 for all of those 212s? Let's go take a look. I can just look in my August tab. Sorry, guys. Yeah, my 212s are written at $3 and $3, and that's it. Okay, so 215 means they give back a lot of, not quite half of, 80 to 90% of half of the contracts, and they win on 55% of the contract. And boy, we would be positive in the money at 214, 215 because we've written a synthetic at 210. So let's go look at holdings given that. So I'm trying to educate you how these things play by my describing it. So here we are with our synthetic, right? Those we rolled into and we got all the way out. Well, I shouldn't say all the way out. Some things are already 10, 18. So they're out at 920. And now we only have 11 million lost because we're moving up. We went from 197 to 205.31. So other than passing our 202 50s and our 200s, which we bought back in that 202 range, we didn't get killed. Okay, we look a lot better. Okay, here we're trending in the right direction. Okay, what did we close at? 1623. Fair value of 16.18, so we're 5 cents overpriced. Now, how are we doing on our new rights, right? This is where we are for next week on the 823. Well, one of them we're behind, right? We collected 5 million and it's worth 618. And then this one we've collected 15.85. So we have a net, and this happens sometimes on Friday. It's just from the time they wrote them to where we closed, it was a little bit higher. So we're winning on this one. It's more contracts, but we're winning a smaller percent than we're losing on this one. So the net is we collected 11,300,000, call it, and we'd have to buy it back for 11.5. But that, if you stayed right at these levels, we'd win it all, right? 100%. That just showed you how much time premium in the 5 days. Okay, guys. Hopefully that was helpful and helped explain it. Let's go over and look at payouts. So this is getting better. I got us at 15 million, right? Which is 38 cents. But still, because of the previous synthetic roll when we rolled out of that 250, which was ugly, right? That cost us a bunch of money. And that's why, but I've certainly seen Coney in worse shape than this. So it just says if we keep this thing moving and going and we do move up, again, that's a big if we can get up to close to 215, I'm okay with 212.50 and win 100% of all of it. But somewhere below 215, we don't want to go to 216 or 217 and start losing on the weeklies, even though our synthetic gain. So I got it here. Synthetic loss is down to 11 million. What's 11 million based on the share count? Well, that's a good question. That's only what, 25 cents, a fourth of it. 10 million would be 25 cents. So technically, we've got a 37 total loss. And if this is a paper loss, if it was more, we only have about a 60-cent loss. So if we get moving up and don't overrun the weeklies and they rate right further out, then we can get even on this synthetic with, if we get up to 220, 230 like that. Okay, guys, that's what I got. Trying to be optimistic here, trying to give you the lay of the land on coin. So here we start a new week, and we shall see how things are going. All right, peoples, have a great one. Hope your weekend's going well, and I hope we have a good trading week next week. Bye for now. Oh, I'm not a financial advisor. This is not financial advice. Have a great one. Bye.